Welcome to another edition of Pizzichetta. My name is Pizzichetta, founder of Mont Wealth, and today I have Chris Filer from Austbrokers Countrywide. Welcome, Chris.
Thanks, Rob. Thanks. How are you?
Pleasure, mate. Yeah, I'm very well, thank you. Now, Chris has 15 years of commercial insurance experience, helping businesses to manage risk and protect what matters the most. Now, Chris is also a award-adjacent podcast host of Another Ball Broker, where he chats with insurance professionals about their careers, the industry, and the occasional insurance topic, all with a dose of humour and, dare I say, a very good wicketkeeper, and now opening batsman for the Glen Waverley Cricket Club. Welcome, Chris.
Thanks. It's taken a long time at Glen Waverley Cricket Club to find my batting position, but yeah, I guess opening is the way we'll go about it now. We'll see what happens next season.
Yeah, it's better to get in there early rather than having to wait all day.
That's right, mate. Always better to go in at none for none than three for none.
Yeah. So you are a bit of an insurance specialist, so we'll get straight into it. So premiums have been climbing hard over the past few years. Can you give listeners a sense of the scale of those increases and what's driving them?
Yeah, the main drivers for premium increases would be inflation, so your cost of living that continues to increase here in Australia, local catastrophes and international catastrophes too. And these include supply chain issues like the issue with the Strait of Hormuz recently, where every product that needs to go through there faces a toll and gets delayed by however many months because of the powers that be. But in very simple sense, if you imagine that everyone, you and I, everyone that listens, everyone in business wants a pay rise every year, maybe even more often, that all just flows on. And that doesn't just relate to insurance companies, that relates to everyone involved in insurance. So everyone from the underwriters that are writing the business insurances, the various classes of insurance, they want a pay rise, which increases expenses for the insurance company, which then they have to pay for by increasing premiums. That's part of it. But that extends to panel beaters and builders and assessors, mechanics, restorers, everyone. Then you've got the local catastrophes like the floods, bushfires, which is seen to have almost more than annually here in Australia. Certainly the bushfires in New South Wales and Victoria, and then cyclones flooding northern New South Wales and Queensland, which seems to impact us. But less so the international catastrophes. They don't seem to drive premiums up so much in Australia because Australian insurers tend to buy reinsurance, but they don't tend to buy it a lot. Certainly not for the types of businesses that we have here in Australia. We're mainly a country that is full of SME businesses as opposed to multinats or anything like that. So they're the main drivers. I'd say that most premiums will probably increase or are increasing between 5 and 10%. But for your larger property insurances, for commercial property, that's plateaued a little bit where rates are not increasing. And if you have a good broker, they can tend to negotiate quite a sizable rate reduction between 5 and 10%. But certainly every other class of insurer, we're seeing increases at the moment.
Yeah, let's get into that point around the broker, then the benefits of the broker, because you said you can negotiate better. How do you manage to do that? What's the benefit to the consumer?
So I guess it's someone that's fighting in your corner. I know that certainly when I first started in the industry 16 years ago, brokers were seen as a bit of a used car salesman. They're up there with the least trustworthy people in business. I certainly took offense to that. I like to think I'm a fairly respectful individual and I work for my client all the time. And I'm not just collecting a premium and then fobbing you off when times are tough, like when a claim occurs. But it's someone that fights in your corner and gives personalized advice to you on whatever insurances you need, whether it be for a business or something as simple as a car or a home. It means that you don't need to be an expert on the general insurance fee. You can just go about trusting your insurance broker to give you the right advice. And if you want to cut some corners and cover, they'll explain the pros and cons of doing so.
Yeah.
And then when the claim comes, that's someone else who's going to manage the claim for you. If you think we'll go with the simplest form, you have a water damage or a fire damage at your house, you have to contact your insurer, whether it be AAMI or RSAV or Budget Direct. You have to contact that insurer. You have to liaise with them, provide all the documentation. You have to understand the policy wording and find all the little covers that could apply because the insurer is not going to go out of their way to pay you more than you're entitled to or pay you any more than you know you're entitled to. So the broker steps in there or their internal claims team, like we have at our office, they know all the ins and outs of the policy wording. They'll say, yeah, you are covered for your contents up to X amount, but there's also an additional benefit for XYZ. You can move to temporary accommodation and as long as it's a reasonable cost, you can stay there for as long as you like until the house is back to normal. It's as simple as that.
Yeah, okay. And I know one of the questions later on was around what some of these common exclusions that catch consumers off guard. You mentioned the policies. What are some of those things that the normal consumer like I don't appreciate when I sign up on a policy?
I think the most common one years ago was flood, and that was apropos of the Brisbane floods that happened. I think it was like 2010 or thereabouts, where most of Brisbane was underwater. And as a result, the definition of flood was reworked by the insurance industry to be a lot clearer so people understood what flood was and where it didn't cross over into water damage. That's probably the main thing that was there. But I'd argue the most common oversight now, particularly in personal insurances like your householder's insurance, would be probably more related to limits on certain items. So if you think about electronic items, or probably more of interest to our audience would be jewellery or works of art, those items are typically restricted. I know, as I said, we'll say it's all general advice, but the limit on jewellery with an insurer like AAMI is $2,000 per item. Now, I know it's pretty old school, but they say save up 3 months worth of your wages for your engagement ring. That's easily more than $2,000 for a lot of people. So I think that's a massive trap that people fall into, is just assuming I've got a content sum insured of X amount, however many $100,000, where's that'll be covered under that, when really it's not. You'll be limited for certain items, and that's the trap, a big trap.
Yeah. All right. We'll need to look at the policy then. So then leading on to that then is also the sum insured. Now, I suppose when people put a building or a house policy forward, you kind of think your sum is, let's say, $1 million for your house. What are some of the issues we've had now, given, as you just mentioned earlier, like the building costs have gone through the roof? Are we underinsured as consumers?
I think most people who just set and forget their insurance policy, which a lot of us are guilty of, they would almost certainly be underinsured. And if you think COVID was it was probably the starting point of what caused the increase in building costs for a lot of businesses and a lot of homes. And if you work on the average of, I think I've done some sums on this before, where the average increase year on year in building costs is around about 8% every year. Now, if you, before COVID, had your homes insured for $1 million for the building replacement value, and you decide to leave it since COVID and still at $1 million, you're probably looking like you're underinsured to the tune of nearly $500,000. It's probably worth 1.5 now to rebuild. And then the results of it, like the end result, is that you can make the assumption that, oh, I've insured it for $1 million, I'll get $1 million. I'll just cut some corners on the rebuild and I'll get my $1 million house. And that's not how the underinsurance clause works in general insurance. It's, you'll get the percentage you insured for versus what you should have insured for. So on the basis that it's underinsured by 1.5 million, or it should be insured for 1.5 million rather, and you've only insured it for one, you're insuring it for 2/3 of what it should have been. So then the insurer is entitled to pay you out 2/3 of what you actually insured it for. So instead of getting $1 million, you'll get $660,000.
Yeah, right.
So you're not out of pocket $500,000, you're out of pocket nearly half of it. So it can be quite a kick in the teeth if you are just one of those people that sets and forgets any sums insured. It's not just related to your house, it's commercial property, it's your business interruption cover, so your gross income or your gross profit sums insured. All those things are subject to underinsurance to a certain degree. And that's where, whilst a broker can't provide advice as to what it would cost to insure your building or your home, they can certainly point you in the direction of people that will be at like valuation or surveyors that can provide advice on that matter. And then they can assist with working out what the underinsurance value is so that you're better educated as well.
You understand? I've seen from my experience when it comes to financial advice, where a lot of people just assume that they've got their life insurance coverage through an industry super fund. And when we look a lot deeper, they're only a quarter of what is required of coverage because there's a default component within their industry super fund or retail super fund. So I encourage everyone there to have a look and go and speak to a life insurance broker. And when it comes to general insurance, obviously general advice, but speak to a general insurance broker like Chris. Now, given we're talking about being underinsured, I think personally, I always try and find insurance that's the cheapest. And I think, yeah, I'm covered. So what are some of the traps there, given that we focus on the headline or the premium?
Yeah, I'd say that with AI now, I'd argue that pricing comparison websites are using smarter AI tech to compare policy wordings. However, the comparison table between insurer A and insurer B is usually as long as Toby Green's rap sheet. You need to be a Rhodes Scholar to work it all out, and you need plenty of time to go through it all. And if you don't have that time, or you don't want to take the time to review each and every definition and sublimit and exclusion, you're more than likely going to sacrifice cover just to save a couple of bucks. And I'd say that any savings you do get will probably be offset by the cost of a claim when it does occur. Not all the time, but more often than not, that would be the case. And I'd argue that if it's too good to be true, a lot of the time, it is far good to be true.
Okay. And given your experience, 15 years commercial broking, what's some of the real life cases where you've seen a business owner or an individual thought they were covered and it's worked against them? And give us an example as well where someone was well covered and it's worked in their favor as well.
Yeah, I'll start with the negative. I remember in my early years of broking, so I was still a junior working my way through the ranks, and I looked after a garden nursery in the northern suburbs of Melbourne. For years, we had recommended, not even before I started looking after them, we recommended they review their business interruption cover, which is just do a simple, what we call a BI calculator. It's a spreadsheet. Any business owner can complete it fairly easily. If not, they can fob it off to their bookkeeper or external accountant who will complete it for them, just to make sure that their insurable gross profit, which is different to your accounting gross profit, is accurate and adequate. We made that recommendation for years on years. I made that recommendation for 2 consecutive years. And each time the business owner was like, it's all too hard. It's fine, Chris, don't worry about it. And I just make my notes to cover my ass, and then we work our way through it. And lo and behold, sod's law, fire happens at the premises. It's an extensive fire. So assessors are appointed to quantify the loss for the client, and we assist in that process as well. And because of the set and forget mentality of the business owner, we knew pretty quickly that the business interruption cover wasn't going to be sufficient to keep the business propped up. There was going to be an underinsurance clause imposed, and he was going to be out of pocket a lot of money, and it was likely going to ruin the business and just shut up the doors and be done with it. Fortunately for him, there is a good news story to the end of it. This assessor who worked on it, who I don't think's in the game anymore, dragged their heels a bit on the claim, didn't act in the most professional manner. We made a few complaints, and in the end, we had a in-person meeting with the assessor to voice our concerns, and we put to him that if he wanted any more complaints to be filed, we would do, but it was in his best interest to look the other way when it came to the underinsurance clause, basically. And we weren't threatening him or anything like that. He knew he'd done the wrong thing. But as a result of his lack of professionalism, our client came out without underinsurance clause being imposed. So he got what he had insured it for. It still meant he was at the age where he was ready to sell up the business anyway. So he just shut the doors, took the money, and he was done for the day. And that's his decision. But it certainly could have been far worse than what it was. He was very lucky in the fact that the assessor dropped the ball, and we were able to step in and have a go at the assessor to make things right. And in doing so, getting paid what he actually insured it for. Not what it should have been insured for, but what he insured it for. So he got some money in the end as opposed to far less, as per the previous example used. A claim that's gone pretty well recently, I'd have to say my own claim where I wrote off my car. I know previously when my wife's had a claim in her car years ago, it was a bit of a pain in the ass to lodge the claim online, wait for an assessor to be appointed, take it to one of their panel beaters to get assessed, and then it has to go to a mechanic after that to be assessed. And you don't really get a choice in the matter when you're dealing with a direct to consumer insurer like Budget Direct or AAMI. Whereas I insured through Austbrokers Countrywide, through a particular insurer in Zurich under a commercial motor policy because I used the car for business. And from the date of loss, which was the 25th of May, it was 3 weeks from that date that the financier got paid out. I got my balance of the market value, which was a couple of $1,000s, And I also got the car seats paid out that were in the back seat as well, because once they're involved in an accident, they're deemed a write-off. So they can't trust the structural integrity of a car seat after an accident. But 3 weeks for a total loss turnaround on a near $30,000 claim, I'd say is pretty good. I certainly didn't think the car was a write-off from the moment it happened. I thought it might be repaired, but Zurich certainly did their due diligence and made sure that every avenue was explored to repair the vehicle. And in the end, they decided to write it off and got sorted very quickly thanks to our internal claims team at Countrywide.
There you go. Good example. So you spoke earlier around the garden centre in the northern suburbs of Melbourne. Can you go into a bit more detail on how insurances can protect business owners, both on the physical side and on the income side?
Yeah, so I guess that's the thing that I think every broker nowadays would recommend it, but we always think about insuring the physical assets. So your desks, your tables, chairs, your building, your cars, and then you move into the financial side, which is ensuring your gross profit. You might insure wages, the additional benefits like claims preparation costs, which pay for independent assessors. But there's also, you need to consider as a business owner, how do you ensure the way you manage the business? And I think a big exercise we completed years ago was we started quoting management liability insurance for all of our small to medium businesses to make sure they're aware there is a way to ensure how you manage the business that'll cover directors, officers, all employees at a very reasonable cost. It's all rated on occupation and your turnover and your number of staff. And that can cover anything from your directors and officers liability to your employment practices, which is things like sexual harassment, wrongful dismissal, any sort of bullying. There's also crime cover. So that's employee theft, in case anyone got their hand caught in the till. Tax audit costs as well, should their external accountants not provide that cover for their clients. And it's in my opinion, it's a very economically smart policy to put in place. And it's the best way to ensure how you manage the exposure that comes with managing a business. It sounds ridiculous, but in such a litigious world that we are in now, where it's so hard to give someone a rap on the knuckles for doing the wrong thing in business, this policy certainly covers that exposure very well.
For those business owners that are listening now, what are like 3 or 4 things that they should be looking at or checking within their own audit? Should they be considering at least, and before they have a chat with you?
I think the easiest thing you can do is engage a broker. If you if you don't have one at the moment, just speak to any broker. I guess one of the weird things about our industry is that you can engage a broker, provide all the information that they require to get you quotes and provide advice on your current insurance program. And even after all the time spent by the broker and yourself to assist in obtaining those quotes for whatever classes of insurance, the owner still, or the policyholder still says, no, it's not really worth my time, or I don't want to pay for it. They can just walk away. There's no cost to them. The broker I don't provide an invoice after I lose a quote opportunity and go, this is the invoice for my time, like a solicitor does. We charge a fee should you place a policy with us. And that fee covers the costs of managing that policy for 12 months. Simple as that. And anytime you want to call to discuss a potential claim or to make a change to that policy, we're on the phone. We're in there and we're at the premises in person, assisting, answering questions. We're on call basically. Whilst I try and put the phone down, once I'm home and I'm playing with the kids, inevitably there'll be emails that come through at all hours of the night that you're checking and answering just to say, yeah, I'm always thinking of you. I'm always doing the right thing by my clients to make sure they're being looked after. And I guess on the flip side to that, if you do have a broker at the moment and that broker doesn't want to answer your phone call or reply to an email or hasn't visited your premises for years, find a new broker. At least test the water. I'd say give your incumbent broker the opportunity to respond and to change their ways, because we all fall into these lazy mentality. We just think it's set and forget, even in our side of the business. But just have that chat with your broker to say, I'm going to put you to the test. Please put forward your best premium. I'm engaging just engage one other broker. Don't get 3 brokers involved, because then you're just scrapping for little pieces of the insurance puzzle, and you're all going to go to the same insurers in the end, just to put them under the pump. And don't do it every year. Every 3 years is fine. You don't want to keep going back to the same insurers, going back to the well, because that well will dry up eventually. And the broker that you engage for 3 consecutive years who doesn't win the business, I'm eventually going to go, not this time.
Yeah.
Don't want to waste any more time on this. You're kicking my tires and they're out of there. So go find a new car to kick. That'd be the best thing. Just review the cover.
Yep, that's very insightful. So thank you. And then finally, if we look forward the next 12 months, what's the view on premiums, and what can we do as consumers or business owners when it comes to insurance costs and risk?
I'd say if you're hoping for cheaper premiums over the next 12 months, I wouldn't be rushing out to spend the savings just yet. As I said earlier, from a property standpoint, the rates have plateaued for probably the last 6 months, 6 to 12 months. I think they'll continue to plateau, or you might see rate decreases if your broker's fairly chummy with an underwriter at a particular insurance company. But most insurance premiums will be increasing or continue to increase slightly, just due to the inflationary pressures of the world today. The good news is we're not expecting any eye-watering jumps that we saw before my time in the broking industry, but the global financial crisis or 9/11, when premiums just skyrocketed because reinsurance costs were through the roof. But for most consumers, some upward pressure in premium is likely to remain. But to ease that pain, as I said, review your cover. If the cover's adequate and there's no insurers in the market that are going to provide competitive premiums for the adequate cover, then there's other levers you can pull to reduce that premium. That's increasing excesses. And that's something I see quite regularly is businesses typically, or business owners more, will have small losses throughout the year. They might only be $500 or $1,000 or a couple of $1,000 that affect the business, but can be quickly fixed just by paying the money and not lodging a claim. And if you're happy to do that's fine, but increase your excess accordingly. If you're happy to put your hand in your pocket for any sort of losses that are around $5,000, don't have your excess set at $500. Increase it to $5,000. It reduces your premium accordingly. The other thing you can do is, if your premiums are quite high as it is, you can ask your current insurance broker to write or manage those insurance policies for net of commission. So every insurance broker will, it's all in our RFSG. We typically earn commissions between 0 and 25%. As I'm stuck in this industry now for the rest of my life, it's my career, I'm trying to look to the future. And for a lot of my clients, I write them net of commission. I don't charge commission. I'm upfront about that. And then I say, I'll give you a separate fee invoice every 12 months and we'll agree a fee that we think is fair and reasonable. And it might be a few $1,000s, but as I said again, it's not every time you pick up the phone to call me, the 6-minute increments of time that I will charge for start rolling up. That's the fee. The fee's there for that very, very reason. So you can call me anytime you like to discuss these things. And if it suits your circumstances, just change those excesses. That's the easiest thing you can possibly do without sacrificing cover. Increase your excess, and it will certainly bring down those premiums quite a bit.
Yep. Now, anything that Chris and I have discussed today is general advice only. Anyone acting as advice without written agreed consent for someone like Chris or in the industry does so entirely at their own risk. Now, Chris, if someone wants to learn a little bit more about you or get in contact with you, how can they connect?
Hey, you can find me on LinkedIn. I don't think I have a profile on the Austbrokers Countrywide website. I think that's currently going through an overhaul. Yeah. But you can find me on LinkedIn, or anyone can call me on the mobile 0400 58985, or you can just find me on anywhere you listen to podcasts as well. Another Board Broker Insurance podcast. I will admit it's not as serious and as insightful as perspective, but it's a bit of fun in otherwise what can be a very boring industry for those not in the industry. So yeah, you can find me on Spotify or wherever you get your podcasts as well.
Legend. Thanks, Chris. Have a great day.
No, thank you, Rob. Much appreciated, mate. Take care.